In today's video, you're going to learn the exact difference between a weak area of supply and demand and a strong area of supply and demand. I'm going to be doing a full trade breakdown from the higher time frame all the way in towards the lower time frame so that you can improve your overall entries, your win rate, and your overall understanding of supply and demand. Now, make sure to leave a like and subscribe, and let's dive straight in. We're here on NZD-CAD on the daily time frame, and the very first thing that I always want to do is just identify my overall swing high, which is positioned here, and my overall swing low, which is positioned over here. I draw in my overall Fibonacci retracement tool, and more specifically, I just like to dumb it down towards a premium versus discount tool, where everything above the 0.5 Fibonacci retracement level, which is this blue line in the middle, everything above that is pretty much just a good sell. Now, after breaking market structure, obviously the overall market structure from a swing perspective is bearish, and we're looking for the overall continuation play in towards the downside. Now, when is price ready to then continue its overall leg in towards the downside? Well, we often look for a supply or demand zone. Well, what we have here is an area of supply, because this here is your overall 50% body candlestick. So I like using 50% body candles to identify a supply or demand zone. If you want to find out what this actual indicator is, just go to indicators and then type in the 50% body candle by Emmy Nast. Load in the indicator and you're going to see these white candlesticks. So what you want to actually just look for are two white candlesticks and then an engulfing candle after that, which breaks an overall trend line or an overall break of structure, because in the future that is most likely going to be a high probability area of supply or demand. Now, what we can see is that price came in towards that area of supply, but then the market just consolidated and moved sideways. Now, what you know from my previous video on liquidity is that when you have an area of consolidation, below the area of consolidation and above the area of consolidation, that is where liquidity will lie. And what you'll often see is that you sweep the low, reverse higher, sweep the high, and reverse back down. So what happened here is that we came into premium pricing, so above the 0.5 fib, we came into a high probability area of supply on the higher time frame. Why this is a high probability area of supply, I'm going to explain in a second. And for the rest, we came above the range, so we grabbed liquidity, and the overall market structure is bearish. So obviously, it makes sense that price from here starts pushing downwards, and we're therefore looking for overall downside continuation here on NZD-CAD. So this is my daily bias explained in like a minute. Now we're going to dive into the 4-hour time frame and then into the 1-hour time frame so that you understand each time frame and also why I'm actually taking the trade. All right, now we're here on the 4-hour time frame, and again, I'm going to keep it extremely simple for you guys. Now, all we're doing first of all is identifying the overall swing trend. So what we have here is a high, a low, a lower high, a lower low, a lower high, and now we're just simply looking to establish a new lower low. So again, based on the 4-hour time frame from market structure perspective, it makes sense that we're looking for an overall short position. Now, in particular, this here is now my swing high, this here is now my swing low. The market retraces into premium pricing, so again above the 0.5 fib, and therefore we're now looking for further shorts in towards the downside, as I believe that the pullback which happened from this low over here in towards the high over here, that pullback phase, which I'm going to mark orange, is now over, and we're now in the green phase, which is the so-called impulsive phase. In the impulsive phase, you just want to be looking to short with the overall momentum, because in the impulsive phase, which is, let's say, this phase here, we anticipate that a break of structure is going to take place and a new lower low is going to be formed. So we want to get in on those short positions, but we need to identify a high probability area of supply or demand. A high probability area of supply and demand, very simply said, is a supply and demand zone or a buy before the sell or an imbalance candle that grabs liquidity. So first of all, what is liquidity? Well, liquidity, there are three forms to identify it. We have a range liquidity, where above the range or below the range, that is where we expect there to be liquidity. We have a swing high or a swing low. Then again, we expect above the swing high or below the swing low to be liquidity. And then last of all, we have trend line liquidity, where you have a trend line and then we expect above the lower highs, for example here, there to be liquidity resting, which eventually will get taken out. So this is very shortly explained the three different forms of liquidity. So what we have here now on the 4-hour time frame is a beautiful buy up before an even stronger sell in towards the downside. That makes this a beautiful area of supply, first of all. Now, why is this actually a valid area of supply, and does it actually grab liquidity? Well, it does. Why? Because what we have here is a little range. This here is my range high, this here is my range low. If we go into the lower time frame, on the 1 hour time frame, it's going to become a little bit more clear, where you can clearly see, even more beautiful actually is here, that it's an overall trend line where you have lower high, and then here we kind of have like a third reaction to the trend line. But then what happens, we come back all the way to the initial high of that overall descending trend line, we grab that high, and then the overall real sell-off in towards the downside happens. Now this, very simply said and drawn out, will look like this, where you have an overall impulse. What happens is the market comes all the way back up to grab the first high of this overall descending trend line, and then the real sell-off down happens. That makes this overall buy before the sell down a very strong area of supply where I'm then willing to sell from. Okay, just for you guys understanding, you can take over the drawing, put the video on pause, and copy that. That makes this a very strong area of supply. So what I'm now looking for is a sell from that area of supply in towards the downside. What I want you guys to then understand is that on the 4 hour time frame, the whole buy before the sell, so the whole buy up before the sell down, you can use that as your supply zone, but we can also obviously refine it to kind of like this individual buy before the sell over here. Again, a supply demand zone is just a buy up for an even stronger sell down, or you use the imbalance candles with the 50% body candle indicator, which I highlighted earlier, where you just take the two most recent candles and draw the zone from the highest to the lowest wick. This is a strong area of supply because it took out this initial high as liquidity, and then the market pushed down lower. Now let's go into the 1 hour time frame. Now on the 1 hour time frame, again, I'm looking for further shorts in towards the downside, because just like on the 4 hour time frame and the daily, we are bearish, right? We had a break of structure up, break of structure down. Now this here is my swing high, and somewhere over here is going to be my swing low. What I'm looking for is a retracement and then another short in towards the downside to trade in line with the 4 hour impulsive phase, which is where we are currently inside of. So on the 1 hour time frame, I'm looking to enter off of that 4 hour strong area of supply, which is kind of like this entire green zone. So wherever in that green zone, I'm just happy to look for a sell. Now on the 1 hour time frame, we have two supply zones. We have supply zone number 1 over here, and we have supply zone number 2, which is pretty much this refined buy before the sell on the 1 hour time frame, which corresponds with the 4 hour. So from both of these areas of supply, I'm happy to look for potential sell back in towards the downside. Now all I'm waiting for is for the retracement to happen, and then for us again to trade in line with the overall momentum. Now remember, the overall confluences that I like to use are the premium versus discount tool, which I'm going to draw in first. So this is number 1, the PVD I like to call it. Then number 2, we draw in what? The overall market structure, which is swing bearish. So we're market structure wise bearish. Number 3, we need liquidity. And number 4, we need the overall supply or demand zone in itself. So we have two supply zones. So confluence point number 4 written in. We have the market structure that is bearish, so we're looking for shorts. PVD, this is the 0.5 fib. That's preferably where I want to be selling from. So a lot of traders might think, hey, Fabio, I now want to sell, for example, from this area of supply over here in towards the downside. However, the thing is with that supply zone is that number 1, there is no liquidity in the overall push down that happened. So when we look at this as a supply zone in itself, there is no liquidity in the overall push down. So what is likely to happen is that this, remember from the overall forms of liquidity, this is most likely just going to be the overall swing high liquidity to then fuel that next leg in towards the downside from the actual area of supply, which grabbed that trendline liquidity. So for this supply zone, we have now two forms of liquidity. We have swing high liquidity over here, and we have that trendline liquidity, which was taken over here. That makes this the perfect area to look for a sell from. So instead of taking a sell, for example, from here, because sometimes people will zoom into the 15 and then say, hey, Fabio, what do we have here? We have premium versus discount. We have, for example, this as the swing high liquidity, and I'm now looking for the short, but you need all time frames to pretty much align. So instead of shorting from here, what I'm going to do is I'm going to wait, because look, if you would have sold here with your stop loss above the highs, what would have happened is that the price would have taken your stop loss. So now I'm going to use that first high here as my liquidity high. I understand that this here is a strong area of supply, and that is then where you want to be selling from with your stop loss above the highs. And then we target an overall new lower low for at least a 1 to 3 risk to reward. And then you see the market actually pushing back down in your direction to eventually hit your TP. So this is how you can identify high probability areas of supply and demand and trade it in line with a fixed set of confluences. Now, if you found this video valuable and you liked what you saw today, make sure to check out the link in the description down below, yt.thetradingacademy.com. There's a link there to a form which you can fill in. You'll get on a call with myself or one of the team members where we can discuss how we can potentially help you understand this strategy in even more detail. So make sure to check that out. Make sure to leave a like and subscribe to the channel as well. Thanks for watching, and see you in the next one.